Hello traders, it's Samurai Trader here giving an update on a number of markets today. I'll be doing two separate videos today, one on the euro dollar, the FX market, currency market, and I'll also do one on the NQ, the futures markets for my clients and students. So I've been doing some extensive travel and I'll be back in town for a couple of weeks, which is always good to be back home with the family. So just before we get underway and I'll run through this 15-20 minute video as per usual, for further information on my fast track day traders coaching program, please email me directly at trader@IamAdaytrader for my indicators, trade setups, etc. And of course please subscribe to my YouTube channel. Now a couple of things I do want to cover while I've got the slides up for my clients that see this every week. You know that repetition is the mother of learning. Become a sniper. That is, I'm going to go through quite a number of trade setups today and a number of opportunities, and we'll look at some failed trades as well as the good ones. But how you really make money is to have a realistic goal of between $100 and $400 a day per contract. As you know, with my trading, I have a target each day of 200 a day per contract. Normally I achieve that within my first hour of trading and I'll stop. That's what works for me. We're all different, but however, just $100 a day will make you very, very wealthy. Something I'd also like to quickly mention, and this came up on the training course I was running the last week or so, is that the myth of the multi-million-dollar trader. There are very, very few traders that trade their own personal multi-million-dollar account. Traders, those that watch me, know that I trade 10 lots at a time. That gives me a very comfortable living, can give you an extremely comfortable living if you're trading that, and it suits my risk profile, my comfort level. And I generally risk no more than 1% per trade, 2% maximum exposure at any one time. Our business is really about 5% the trading strategy, 5% money management, and of course a massive 90% psychology. I'd love to tell you I trade 100 lots at a time, but I don't, because it doesn't suit my personality, and there are so few traders that can do that. And it's really interesting in working with a lot of traders that work for institutions. When they sometimes leave, they fail because they don't have their coach there, they don't have their boss, and when they're trading their own money, it's a total different scenario. Now trading also is very, very much about our psychology, as I mentioned, but our decisions determine our destiny. Success or failure is about the small decisions we make on a daily basis. Now, as I mentioned in my last few videos, your past does not equal the future. If things haven't been working out for you, you can turn them around, but you need to go back to step one. Now, as Thomas Edison once said, if we do all the things we're capable of doing, we'd literally astound ourselves. And what I mean by that, when it comes to trading, you can learn how to become an extremely profitable trader if, and here is the if, traders, because once again, the course I was in running, there would have been about another 10 or 15 traders that have failed time and time again. Quickly, why? Money management, risk, greed, trying to trade too many different strategies. And we have, and I've spoken about this in seminars and on my recordings before, a thing called ego depletion. That is, the more decisions that we have to make, the sloppier we become with our decision making. So please traders, and hopefully you become clients of mine and you'll hear me talk about this, master one setup before you move on to the next. That is, own it. So let's get stuck into this and have a look. So what we're looking at is the 5 range. Now with the euro dollar, we've got some, of course, the best market in the world as far as liquidity goes. One huge thing though is that with trading Forex, when we have red flag news announcements, excuse my grammar, it's been a long day, of course you get very wide spreads, and these are things that we need to be really aware of. And we can see here, and let me just change this here for a moment. Let me just number one, let me just, sorry traders, just get a couple of changes here. a large pointer, here we go, is that this area, this happened all within a matter of seconds and minutes. So and of course you've had very wide spread. So one of the key things we want to be doing is looking at for red flag news announcements. But a couple of key things I want to bring up is you could have got in on some of these trades. Now if you're trading a standard lot, what you've got here is each one of these candles is worth $50. So you've got some great profitability if you're willing to pay maybe 4 or 5 pips in brokerage. So that's what a spread really is, by the way. Let's not mince our words here. You know, spreads are brokerage, and that's a great thing where 99% of the time I trade futures, because I'm paying what, on average $4.70 per contract, compared to maybe $10 to $30 per contract in trading Forex. But one huge advantage with Forex, of course, we get some fantastic trends, and you've got some great opportunities, particularly in the London session and the New York session in trading these markets. So let's have a look at a couple of things I wanted to point out. We can see here our T1. Now if just for a moment, if we could just ignore the extreme movement here in the timing, because a lot of you would not have got filled, or if you did, you would have got a ton of slippage, is that notice here when we get these moves away here from our moving averages, I call this angulation or bubbles. When you get these, for those traders that are counter trend trading, these are some fantastic opportunities to take some good profits. Notice here, particularly when you get a bubble and you get a divergence on the platinum, these are great opportunities here, and you'll get some really good moves. So note these bubbles, and particularly when the market's not moving as fast. Here we've got our 89, we've got our 200, our classic 200 bounce. These are trades that you should be taking every day, and once you master the T1, should be a part of your trading arsenal, because they are just a beautiful trade. Now over here, so we note the bubbles here, and you'll see those every single day, and remembering what we really are, we're pattern traders. We're looking for patterns that repeat every day in the market, and of course the market has a memory. Now this is a real dangerous area, and for the newer traders I want to quickly explain why this is a danger area. We're right at the pivot. Yes, you've got a nice little pivot bounce there, but it's only very small off a bubble. You've got to be very careful. This is what we call a T89 setup. You've got to be very careful with those. Excuse me. And here we've got divergence here, which is great. This is a higher low, but it really is almost a double bottom. But notice the 89 and the 200s are horizontal with the pivot. These are areas that you really want to be very careful of, because we just don't know what area or what direction quite often a market is going to go in. We did have, of course, a falling platinum, which is giving us some signals. However, it is an area, unless you've got a stop which really should have been, oops, on that one there, your stop should have been above your little swing high here, and of course you went up and tested that stop and away it went. So be very careful where you see that. But where you get these little double tops and double bottoms, generally you can get in and scalp the market very nicely. Now this is a trade setup that comes up, and I'm going to ignore the time of day, etc., for the sake of what we're doing today, traders, just so I can point out some trade setups. Is the classic ABC. Now the problem in trading ABC setup, that is where you've you had almost a bubble here, and well, you can see here we had divergence here on the platinum. But even if you didn't take that, and as a new trader, once again, do not counter trend trade if you're a newer trader or even an experienced trader that is not consistently profitable. Counter trend trading is almost like an addiction. When I look at traders that are failing, they're usually counter trend trading extensively. Please stay with the friend. The trend is your friend, and it's so true. So getting back to the ABC, sometimes the ABC you can be in too late, because traditionally we are taught to wait for the break, A, B, C, and wait for your break here. And you can see over here, and let me just go back to my pointer. large pointer here, we can see a fractal, and these little black dots, by the way, are fractals, and we won't have time to go into those, but they're an essential tool to use as you become an experienced trader. They're invaluable, and they'll put you into a lot of profitable trades. But notice here, you would have been in the close of this candle on a traditional ABC. We were in on this candle because what we also had was what we call a T11. We had we had a higher low with a T1 plot. Now our T1 does not plot until we get a tick above that candle there. So you would have been in on that candle, and away you go. You had a traditional T2 down here. This basically, by the way, also is a T10. The slingshot trade, you had a T2 and you had another T2. But notice here we had some definite divergence here. Trade, you got a nearly a zero line cross on your platinum. Now let me just explain this to you a little. On the platinum, or even any good MACD that's been correctly set up for trading, when you get your zero line crosses, when you're starting to head towards a cross, it's a good indication that you've got a change in trend, as long as you don't get a bounce, and you should be taking short trades. Now what's happened here is you can see here we've gone up, we've tested for a double top, you had a trade down here, then you had a triple top. Now a little rule of thumb here: when you get strong divergence as you had here, be very careful in trading against strong divergence. So if you get and we call these T19s, when you have a T19 trade, be very careful in taking these. Now another thing here is, if you're following the rules, you would have waited until your zero lag kicked up, and you can see then you bounced, you come down, you bounced up, you had a triple top, and then you had another test again before it fell away, and you had a 200 bounce off of 200 down here. So please be very careful. Once again, if you're trading with the trend, and this was a classic pivot bounce here, and you really had one here as well as a 289 bounce, this is where you make your money. These are consistent. We've come up here, we've had a 89 bounce. Now around this time, be very careful where you're taking trades right up against a pivot, because what happens quite often, you're going to get these bounces. So continuing down here, we had a pivot bounce, we've come right down, we've had another pivot bounce. Now as we know with pivot bounces, they're not always true, and that is, you can get a lot of false moves on pivots. So what we always wait for is our paint bar. We're always waiting for a T1 to confirm the bounce off the pivot. Okay, so you've got one here, you've got one here. Up here we've broken through, we've got an ABC pattern set up, and for me, I love it when I see a paint bar here. This confirms I've got a lower high, you've got a break here, you would have been in on both the ABC and or your T1 signal here, and this is an ABC, a T11 and a T10 all in one. Now by the way, I call because in training we have code names for these. We have around 12 key setups. Your T1s and your T2s are your core setups that you're going to be trading, particularly as a new trader. They're your bread and butter trades, and as you become more experienced, you're going to start trading other codes, other different setups. For example, what we have right here is a classic T89 setup. Once you gain a small amount of experience, you're going to start to take these, and here what you're getting is great angulation. Notice here this, you're 89, and notice here you got a bubble. It's like a little bubble forming. You've got an angling away from your 89 EMA. You're going to be in on this candle here, or to be conservative, you're going to wait here for your zero lag to come up and turn cyan. Now these you'll generally get 2 to 1, so for every dollar you risk, you're going to have a 2 to 1 payoff. Then what have we got up here? We've got a pivot bounce. You got a pivot bounce straight off a pivot here. Your zero lag is confirmed. Notice here your 200 here is sideways, and so is your 89. So it's a higher danger area, but it's a fairly reliable trade. Down here we've got a bubble formation again. You wouldn't have been until this candle here. Then your stop, remember, is tucked down below here. To be even more conservative, of course, but then your stop starting to get a little large to be below the pivot. So you're probably going to be just below here. You've gone down, you've tested that right to the tick, and finally it bursts up and goes up, and you actually ended up having a triple bottom. That's one of the major benefits, once again, of getting back and trading Forex. It's a great technical traders market. Here we've got an 89 bounce. That is, we can see that our 200's in a downtrend, our 89. We then rally up and we then have a plot, and away we go. We have another PB, a pivot bounce. Now if you had have taken this pivot bounce, you would not have taken this trade. I do not stop and reverse. Now some of you maybe say, well, what if we stop and reverse? Well, let me just explain something here that I highly recommend you be very cautious of. Be very cautious in trading against the pivot. That is, to enter that trade, you wouldn't have entered till here, and then what there went and happened, you went and bounced immediately. You want to give it room. For an example, here you've got plenty of room to move down to your lower pivot. I want to be very cautious. Now here, what about this pivot? Well, what I've got is two things that'll help me ignore this one here, and that is the 200. The 289 are such strong support resistance lines. Here you've got another beautiful pivot bounce. It's also a bounce off the 89, and down here we got a pivot bounce. Of course, this is a counter trend move, and away it went. There's a whole lot more I could be explaining here on why I've taken some trades and didn't take others, so I don't want to waste too much time here today because already we're 17 minutes into this video. Once again, my coaching, I cover this extensively with you when I coach you how to use the indicators, or our one-on-one coaching. I do all of that. So here we've got another beautiful now let's talk trend trading for a moment. You've got a counter trend there. And this is what I've put in here: the danger of counter trend trading with no angulation. So let me explain this. Remember earlier I mentioned I look for bubbles. That is, I want to see the price move well away from my channel or from my EMAs. Here we're pretty much running in a line, in a trend line, along with our 89. So notice here I could almost do a trend line here to there, and it's almost a channel. What you want to see is a bubble away, so it springs back, or a snap back to the means. So notice here you had your divergence, you had a high in price, but it was a dud. The same thing here, you had clear divergence, had a high in price, lower on the divergence, but it was a dud for you. You would have bounced, and you would have stopped you out. You only want to be taking these where, for an example, if a price blew up to here, where you've got angulation, that is where you've got a very clear wedge, or you can show that you're moving average, or you've got a bubble in price. Very important. Now traders, if you stay trend trading alone, it's a lot safer until you really know your stuff. For an example, here you had a beautiful bounce off your 89 and 200 here, lovely trade. Another one where you had one here, which by the way was right against the pivot. You would have been bounced out on that one. You would have been stopped. I've got to tell you, would have been stopped on that one, but had another one, then you had another one. Now you may not have fulfilled your profit target, but it come down, it would have tested your stop, but eventually it went up here. So it's all about staying in those trades. Now remember I mentioned here about gaining or going for $200. Now here, by the way, $200 a day per contract, that's 20 pips. You romp it in trading correctly with the euro dollar, the Aussie dollar, some of the main markets. Now let me show you a counter trend trade that really stacked up. Notice my 89, but notice the angle. Notice this black line I've drawn in. You're moving well away from your 89. See this huge distance here? Now I've also got a pivot bounce. Now my entry would not have been till here. Why is that? I'm waiting for my zero lag to roll over. It is much more conservative, but it will save you so many times. Likewise, this trade here, please ignore this red candle. I'm just marking up for this white. Your entry was not until this candle here, but that was a great 2 to 1. Likewise, this is a great 2 to 1 as well. Now we've come down here and you had a bounce off your 200. These are very bankable. Now here is an issue with this. One is time of day, that is it's 3 a.m. so we're heading towards the close of New York. Remembering in trading, traders, time is not your friend. What do we then enter into? An area of extreme chop. This is where you want to consider exiting these sorts of trades. And this is one thing where you'll see futures, you'll trade right up till 6 a.m. Here we can see here we really went sideways for the next few hours after this. So this is a quick rundown, traders, on the market. Now the other thing I wanted to say on this is this. Trading is really easy, buying dips and selling rallies, but trend is my friend. I get back to this as much as you'll see me, and most of the traders see me counter trend every day, counter trade trend, but I know my stuff. Please, if you're not profitable yet, please keep trading with the trend. Now for more information on my fast track day traders program, my strategies, my indicators, my live trading room, which is still about a month away because I've got a major contract I haven't completed with an institution I'm working with. Once it's completed, I'm launching a trading room. So for those that are interested, please email me, and of course please subscribe to my YouTube channel to be kept up to date. So traders, I hope this was beneficial, and later on today I'm going to do a rundown and do a quick recap on the NQ, the last couple of days actions. We've had some great trading on that market as well. Thank you.